Warren Wealth Management can help you with all aspects of retirement. Marcus Warren has been nice enough to join me, and we always have a specific topic. Today it's a little unusual. We're going to talk about emotions.
Yes, yes.
Emotions. A lot of times emotions are a good thing. If you're happy, if you're all this joy at a wedding or a graduation. But when you're investing, maybe emotions aren't that good.
Yeah, so what I've learned over the course of being in business for almost 20 years now is that investors tend to be a little irrational. Sometimes now they try not to be, but they just can't help it. And I have found that I use more of my my psychology skills versus my financial skills when dealing with investors, and that's simply because when the market's volatile, and matter of fact, it's been volatile this week. Monday, the market was down pretty significantly. It bounced back the last couple of days. Today, it's down, but it causes investors to act emotional a lot of times.
And you don't want that. Okay, so the two emotions that we're talking about. Fear, right?
Yes,
and greed.
Yes.
So are these, when it comes to investments, these are kind of polar opposites, right? So because I would think fear makes you conservative, and greed will make you, yes, don't get killed in the process, right?
Yeah, and so the two emotions that drive the market are fear and greed. And so what you're supposed to do when you're investing is you're supposed to buy low, and you're supposed to sell high, right? And unfortunately, because of those two emotions, people tend to do the opposite. They tend to buy high and they sell low. And the reason is because when the market is rocking and rolling, and so for the last 2 or 3 years, the market has gone up and up and up, and people feel good, and they feel good about themselves. And so what they do, they tend to want to jump into the market because that's when they hear, hey, the market's at all-time highs, the market's doing fantastic, and they get excited, and that's when they want to jump in. And then as soon as they jump in, the market tends to do what the market does. It's going to go up, it's going to go down. But as it starts to go down, that's when all these other emotions tend to kick in. That anxiety kicks in. And then, of course, that fear kicks in. And then what happens right after that fear? There's panic, and they want to jump out. And then when they jump out, they just want to wait, and they wait. And what do they wait for before they invest their money again? They wait until the market goes back up, which you get in that perpetual cycle of buying high and selling low. It's like this. It's like going to Macy's, right? You go to Macy's and you find your favorite pair of jeans, and they're 30% on sale. But you're like, you know what? I'm going to wait. I'm going to wait until they go off sale, and then I'll come back and buy them, right? And then you'll take them back later when they're on sale and get that sale price back, as a refund, which doesn't make any sense. And it doesn't make any sense when investing either. Those emotions can drive people mad, for lack of better terms.
So if for no other reason, and there's many to call Warren Wealth Management, but you guys, you keep a level head. You've seen the market. You can go past performance.
Yes.
You can use some of your resources to find out when in and out. And also, this weighs in heavily, doesn't it? The personality of someone. Do they tend to be a risk taker? Are they a saver? Does that work into it as well, Marcus?
Well, yes and no.
Okay.
So we always have our clients do a risk assessment. And so you'll have a client who is more on the risky side, right? And so they want to be a little more aggressive with their investments. And then you'll have a client who is more on the conservative side, so they want to be more conservative until those emotions kick in, because that conservative person, when the market starts to do well, they get excited and they get greedy, and although they're conservative, the market's doing well. They're like, hey, Marcus, we've done 7-8%. That's good, but the market's done 18%. How can we be a part of that? And it's like, pump the brakes, pump the brakes. You are a conservative investor. You came in as a conservative investor, but when that greed kicks in, when the market's doing well, people want to jump in. On the flip side, you have aggressive investors who say that they can handle losses and they can be aggressive. And then, of course, March of 2020, when the pandemic first hit and the market dropped 30% in 16 days, those aggressive investors were like, hey, Marcus, maybe we should jump out. I don't know. And so those emotions kick in. And although you think you're this way, investors tend to act a little irrational when the market gets volatile.
So you have proven the fact that, yes, emotions can affect your investment, ultimately affecting your retirement and your nest egg. So You mentioned volatility early in the week, and it's kind of leveled back out.
Yeah.
But for the most part, as you said, things have been pretty gangbusters. It's been good.
Yeah, and it's like this. You have to have some sort of, to take the emotion out of the market or out of your investments, you have to, one, hopefully you're working with a good fiduciary advisor who can take the emotion out of your investing. Second is you have to make sure you have some sort of system or foundational assets that are going to be the foundation of your retirement or whatever you're trying to achieve. Because the one thing we know is the market does what the market does. I say it all the time. It's going to go up. It's going to go down. You can always expect volatility, but what you have to have is a plan which tends to tamper down a lot of those emotions.
So yeah, I know that if you had a crystal ball, then we'd all be millionaires. And I know you'd help me out, Marcus. I know you'd help me. But with that being said, through your experience now, this market, we could go for a while here on this high. You think?
Well,
it's a tough call.
I mean, it's definitely a tough call because you never know with the market. But I do believe that with the economy right now, turning that corner finally, we could still see some upwards movements in the market. Although, just like I said, I'm not a soothsayer. I don't have a crystal ball, but I do think that the market does have a little more room to move. But at the same time, in the next 6 to 12 months, the market could be down too. So you have to just make sure you have some sort of plan.
I want to go off script a little bit and ask you. A lot of our conversation is always off script, but I get real estate guys who come in here and gals who come in here, and I also get people in the car industry, and I always say these are good economic indicators. You can't find a car right now because as soon as they hit the lot, they're selling.
Right.
Real estate, same way. You put a house for sale, boom, it's got. Is that a good economic indicator? Is that a good way to saying, okay, the economy is good, or is that kind of a false little tell there?
Well, I mean, that's just one economic indicator out of many. Economists are good at looking at all kinds of these indicators. From home starts to GDP, to future earnings. If you're looking at specific companies, you have to look at their benchmarks and other industries and where the industry is going. So there's so many different things that one can look at. That's why you have to make sure that you just have that plan and you're diversified out, because you may have an upwards moving market in real estate, but then the tech sector could be down. And so, to mitigate against a lot of those ups and downs, it's good to have your assets diversified across all asset classes.
Another big advantage, too, with going with Warren Financial Advisors and Marcus Warren, is we talk about this a lot. We've been talking about stocks all day, but taxes do work in there.
Yes.
And your health works in there. And these all are things that you have your fingers on the pulse of everything that you need to know. It's multi-layered, right?
Yeah, we are a full-service advisory firm, meaning that we deal with, of course, investment management, but more importantly, we also deal on the tax side. And so a lot of times those things are parceled out. It's all in-house with us, with benefits clients. Because one is you can make money, what we say, offensively by getting good rates of return on your investments. But then you can also make money defensively, which is ways that you can save money. And you can save money by having a tax strategy that's going to put more money in your pocket in the long term.
You tend to do a little bit of both, right?
Absolutely.
So cover your bases. That's smart.
That's it.
Okay, Warren Wealth Management, Marcus Warren. For a 15-minute conversation, talk about that. I'm going to give folks the details on how you can have a 15-minute conversation with Marcus. How does it work? What will be discussed? So
in that 15-minute phone call, basically we want to find out where you are and then where you want to be, and then see if we're currently a good fit. A lot of times we can help clients progress wherever they want to go in retirement. Other times we can't. Other times they may be fine. Other times we're just not a good fit. And so that's what that 15-minute phone call allows us to do. Just see if we can work together and if we can add value.
TalkToMarcus.com, www.talktomarcus.com. That 15-minute conversation. See if there's a fit. If you're at or close to retirement and you have $250,000 in investable assets, Marcus is your answer. I'll tell you what. I know there's a lot of buzz about you. You're helping folks secure the retirement of their dreams, and there's Marcus at work. Again, it is Marcus Warren, and to me, I just like the fact that I don't have to go to a tax account. I don't have to worry about. I don't have to farm out everything. You're a one-stop shop.
Absolutely.
And you love discussion, and you are knowledgeable, my man. You must. How many trades do you read? You're on top of everything.
You know, there's all this continuing education, all these publications that you have to stay on top of. But when it's your passion and when you love to do it, it's not work.
All righty. Again, Marcus Warren, Warren Wealth Management.